This is Las Vegas Real Estate Now, where we bring you the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld, along with our co-host, Shelley Brown, and we've been selling homes here in Southern Nevada since 1988. Shelley and I are also very proud to be part of the Real Estate Radio Network. That is a national network of local real estate professionals delivering timely, balanced truths about local market conditions. And with Shelley and I in studio, we have Steve Schauer from New American Funding. He's been a local lender for 22 years. We hear a term when we're dealing with our buyers and borrowers called extenuating circumstances.
Yes.
Let's talk about that.
One of those great terms in the mortgage business.
Yes.
So basically, we know the rules that we have to wait X amount of years before a possible foreclosure or possibly the purchase after foreclosure or a short sale or a bankruptcy. But there are some circumstances, some ways kind of around that scenario of the 3-year or 7-year waiting period. And those are technically extenuating circumstances. Reasons beyond standard things that happened out there. So typically the extenuating circumstance is a loss of income, typically. Now we hear a lot of people saying, I got divorced. And unfortunately, that's not an extenuating circumstance. Someone would say, hey, my income was cut in half.
Yeah, I lost my wife's income.
Yeah. And unfortunately, that is just not, because that's something that could have been foreseen or something. It's not just a quick, here you go, or most of the time, at least I should say.
Well, yeah.
Most of the time.
Yeah. You say you don't have extenuating circumstances. What are the timelines?
Typically, a 2-year on a VA loan, hence the reason I love the VAs. We've talked about that plenty of times.
Yep.
A VA loan has a 2-year waiting period. FHA loan has a 3-year waiting period, and conventional has a 4-year. So 2, 3, and 4 years. 2
VA, 3 FHA, 4 for conventional.
4 conventional. Now that all depends on, as I always kind of meet with people and educate people about the types of loans, it depends on the amount that they're purchasing, if they've served if they've been in the military, all kinds of scenarios.
If I defaulted on a VA loan, can I get another VA loan?
Possibly. They're most likely no, but there's possibilities that you can, such as the extenuating circumstances. We pull up on every single loan all these scenarios of there's a government site that you pull up that says if you owe back on government, whether it be taxes, whether it be VA. So it would tell us right away if we did that.
Okay.
And actually actually leads to a question of what's called a CAVERS number. And a borrower just recently had that, a scenario of a borrower we had where they had this case number or CAVERS number against them. They foreclosed on the previous FHA loan.
Oh.
And one would say the same thing of FHA, that you cannot, and they had a case against them on FHA.
Wow.
So we just helped her write a letter to the FHA that said, here's my circumstance that happened, and they removed that case number, allowing her to purchase.
Wow.
So
good.
it can. So are there scenarios like that can happen?
Although we are seeing signs of some mortgages out there, you still have to qualify for them, but they're being more aggressive to loan money now.
Correct. We have some interesting other options on loans, whether it be an adjustable rate or things like that, but they're still fully qualifying loans. The state income loans are no longer available. Right?
Yeah. You can't just go in and say, I make this much money and I have this much money in the bank and give me a loan.
Correct.
You got to prove it.
Correct.
You got to show. And that's the thing. And honestly, that's where we really got in trouble.
That's the big problem that we had. That was the huge problem.
You've been listening to Las Vegas Real Estate Now with hosts Harvey Blankfeld and Shelley Brown. Please tune in every Saturday at 11 a.m. right here on News Talk 720 KDWN.